future. Rethink Labs grew out of our increasing realization that technologies such as blockchain, machine learning, and artificial intelligence are rapidly altering the way the world does business. The Rethink Labs Consortium is composed of groups focused on specific areas of research, such as machine learning, and as we'll hear very much about today, fintech. As you can attest, fintech is growing by leaps and bounds. At the business school alone, we have about 130 students that are interested in blockchain and formed a club just last year. So Rethink Labs is ready to capitalize on both our interest and expertise in data and technology and the Keene Institute's long tradition of bringing members of academia, government, and the private sector together to discover sustainable real-world business solutions. So Rethink Labs will help businesses not only prepare for the future, it will help shape the future. So before I turn the program over to Eric, I also want to thank those that helped to make the symposium a reality. The staff here at the Keene Institute who did all the logistics for today's event. Georgia Allen, the the Associate Dean of IT here at Keene and Flagler, and her team for the work they did to establish the supporting infrastructure for the Ripple Validator here at UNC. This work will provide us access to the peer-to-peer network and other universities that are part of the Ripple initiative, opening up a host of research and teaching opportunities for UNC faculty and students. If you'd like to see the process of installing the validator here at Keene and Flagler, please check out our social media channels. Our sincerest gratitude also to Ripple for their generous financial support and philosophical support of our work with cutting-edge technology and data research. To our esteemed conference host and my colleague, Eric Geisels. Today would not have happened with you, and I'm going to turn the program over to you at this point. And you have to give the microphone to the students when they're done.
Thanks. Thank you, Greg. It's my turn to welcome all of you. It's going to be a really exciting afternoon. My name is Eric Geisels. I'm a professor of economics, as well as a professor of finance in the business school. I'd like to take just a few moments to kind of plant some seeds in your mind about some of the things that we're doing thanks to the Ripple grant. Some of them are already described were described by Greg in terms of the Rethink Labs. There's also a lot of things going on in terms of the curriculum development. We are working on joint degrees, notably, for instance, double majors between computer science and the business school, which is really important for today's labor markets demands. We're sponsoring projects by students a little bit in the spirit of the MIT Media Lab, where students form interdisciplinary groups working on a project in partnership with various industry partners in collaboration with them, and they are bringing input and mentor some of these projects. We are adding new courses on blockchain, machine learning, and fintech. Actually, I just started teaching a new class in fintech here at the business school last week. Since this is kind of technology, I wanted to finish in a funny way, referring to automotive engineering. I think the sort of the Ripple grant was sort of the spark that started the engine. The engine is running still a bit rough, but our plan is to create a Formula One car. So that's where we're heading. Now I'd like to introduce our first speaker, and it's difficult to be short, but I will try to be short, to introduce Cam. Cam graduated from the University of Chicago and with a PhD. And when you graduate from the University of Chicago, either in economics or finance, there's a reasonable probability that you have a Nobel Prize on your committee. Well, Cam doesn't have one Nobel Prize winner. He doesn't have two. He has 3 Nobel Prize winners on his committee. That's a good start for the profession. And from there on, he came to Duke after graduating from Chicago, and he has done pretty much anything that you can imagine that you want to do as an academic in the finance profession. President of the American Finance Association, editor of the Journal of Finance, which is the flagship journal of the society, among many, many other things. You can name any topic in corporate finance or as the pricing, and you will find a paper written by Cam. There's no doubt about that. I'd like to finish a little bit more on a personal note. About 8 months ago, I sent an email to Cam, and I told him, look, I'm tapped to teach fintech at UNC, and Cam invited me to his office over at Duke, and he was like a true scholar, generous with his advice and time. So it's a real pleasure, and I really was grateful for that. It's a great pleasure to have you as the first keynote speaker of our kickoff. Thank you, Cam.
Thank you, Eric. So I gave Eric all of my teaching notes, which I guess after 8 months are completely irrelevant now. So before I start, the questions that come later, we'd appreciate if you use a microphone because of the live stream and the videoing. And my students are actually here to do that. So Roman and Mike are co-presidents of the Duke Blockchain Club, and Joey's the president of the Duke Blockchain Lab. And it's great to have them here today. So today, I'm going to talk about ICOs, and I know a little later on, David is going to talk about ICOs. So before I do that, let me give you a little background in terms of my interest in this space. So as Eric mentioned, I was editing the Journal of Finance for 6 years. I didn't teach anything for 7, because that job, you have to deal with thousands and thousands of papers every year. So it was a full-time job. So after that, I decided to completely retool on my teaching. So not use the old teaching notes. And for international finance, I felt that I should introduce cryptocurrency, which was a new idea in 2014. So that lecture went really well, and the students persuaded me to do an entire course. So this, for me, actually started a long time ago. In 2014, 2015, I offered a course which was an unusual course. So it was called Innovation in Crypto Ventures, and I managed to attract 13 students. So the spark was a long time ago for this course. So the next year, it grew, which is good. And the course now was offered at the Fuqua School of Business at Duke University. And then the third time I taught, a full section. So we capped out at 70 students, couldn't take any more. So they said, well, you can have another section in the next year. So what happened is this. Not one section, but 3 full sections. And indeed, first-year students not allowed in the course because the second years get the preference. So this year, ooh, what's going on? Okay, you can guess what's going on. Look at the correlation with the price of Bitcoin. Okay, so that 2018, anomalous, and indeed, unfortunately, many of the students wanted me to teach them how to be a Bitcoin billionaire. So that is not my course. My course is a blockchain course. So let me kind of go through, I want to leave the 10 minutes at least for questions in this space. I teach this course, it's interdisciplinary. It's 100% focused on blockchain. I attract finance students, marketing students, accountants, operations. We touch all the different areas that blockchain touches. In the media, we hear about Bitcoin and things like that. That is just the tip of the iceberg, as I'll try to convince you. Indeed, if Bitcoin goes to 0, the students that walk out of my course are in good shape. Okay, so it is a general technology course, an application course, and indeed, almost all the grade depends upon a 15-page pitch deck with a new idea that uses blockchain technology. So I'm the venture capitalist essentially judging them. So I do have this experience of being pitched by, I think it's about 70 different student groups, plus I get a lot of email for people asking me to be involved in an ICO, being a advisor for a new venture, a partner, all this stuff. So I deal with the decks. Indeed, what I do with my decks is the first thing I do is send them to the Duke Blockchain Club and the Duke Blockchain Lab and let the students go through. And it's a great learning exercise to go through this. Today, what I want to do is to talk about some of the red flags and give you some idea of the depth of this space. And we've seen a lot of red flags, and I'll focus a fair bit of my talk on some sort of obvious stuff so that we saw in real time in my course. So the first thing, this is the price of Bitcoin just around the enrollment in my course last year. Okay, so Bitcoin goes to almost $20,000. Okay, so what's going on here? And I classify this as kind of bandwagon investing. And the term is a Warren Buffett term. So let me just quote Warren Buffett. The rising price has on its own generated additional buying enthusiasm, attracting purchasers who see the rise as validating an investment thesis. So as you see it going up, you're kind of believing it even more. As bandwagon investors join any party, they create their own truth for a while. Okay, so the last few words are very important. So what's interesting is that Buffett is not talking about Bitcoin or cryptocurrencies. He's talking about gold in 2012. And kind of a similar idea. So gold, this is gold. It looks kind of similar to the previous graph, and a very large correction in the price of gold. And of course, for Bitcoin, we're watching this in real time. To see a bubble like this for an academic especially, to see this unravel in real time is very interesting for us. Of course, it's less interesting for the people that bought at 19,000. Okay, so there's a lot of misunderstanding in this space. And when prices go up so dramatically, and even if the price is $3,500 today, that is dramatically different than $10 or 1 cent. Okay, so I have a few Bitcoin that I use for educational purposes. So I set up wallets for my students, and I bought them at 400. Oh, it was great when it was 19,000, but I bought them at 400. So it all depends on when you actually get in. But there's a lot of misunderstanding. This technology is somewhat complicated. There are ICOs or ITOs, initial token offerings. Many people don't even know the difference between a coin and a token. So, and kind of loosely, people call tokens coins. So coin has got its own blockchain. A token uses another blockchain. It's kind of blockchain 101. And a lot of the work that I do in my course is to give my students the ability to determine quickly if somebody who is a so-called blockchain expert actually is an expert, or they really not understand it. And it's very dangerous. So we had a discussion at Duke, a blockchain panel. There are maybe 400 people in the auditorium, 4 so-called experts. And I told my students for an assignment to write down every false statement that they made about blockchain. Kind of interesting. And a live assignment in my course is to go through the first 7 minutes of a video, a blockchain training video that retails for $2,500. Go through the first 7 minutes and detail all the false statements. Okay, so this sort of space, given it's complicated, there's misunderstanding, and people will take advantage of you. So let me, before I go into the red flags, just give you an idea of the diversity of the space. So Bitcoin was introduced a little more than 10 years ago. It was a great idea. It is a very good idea, but people have kind of got around to understanding in general terms what Bitcoin is, and maybe they've heard of Ethereum. But Bitcoin is like the first generation in this space. This space is way deeper. So Ethereum is a technology where you can do transactions, but you can also run a simple computer program on a network. Think of it as a distributed computing network. So this allows us to put very simple, what they call smart contracts, into this construct to do, for example, financial transactions. So it could be any derivative could easily be put into this technology and bypassing the traditional financial intermediaries. So this is a new idea. So Bitcoin, you can just do a transaction. Ethereum is actually worth something because it provides a venue to actually run a computer program. So that is different. So that's like number two. There's also a class of tokens called utility tokens. So again, they're actually doing something for you. So a good example is your desktop computer or your laptop. How much CPU do you use in a day? Like 10 minutes? What if there was a technology where you could rent out some of that CPU, maybe overnight, and be paid for it in real time? And that's what Golem does. Or you've got a hard drive, and there is an extra terabyte that you're not using right now. So why let it just sit there when you could be paid for renting it out? And when you need it, then you end the rental agreement. So you're paid in real time for that. So there's many tokens that are available that have particular functions, and that's the third class. There's also security tokens. So this is where you could think of, let's say, IBM issuing their shares in a blockchain construct. So your token is worth a share. And indeed, it wouldn't be a problem to buy one share. Indeed, it wouldn't be a problem to buy 100th of a share. So think of the future where you've got a wallet with various different things in it that you could use for payment or for investment. So you might have some US dollars, you might have half a share of IBM. This is all possible. You do not need the usual financial infrastructure. This is extremely disruptive in terms of what's happening in the current finance landscape. To actually settle a stock transaction, to sign over the ownership of stock from me to one of you, that takes 2 days. There's a lot of middle people involved, and that just doesn't make any sense in the current landscape of the internet and what we've got in terms of blockchain. That will change, and we will see the tokenization of securities. The short forms here are STO. I know today is ICO in terms of my presentation, but that is a security token offering, and then there's also a specialized equity token offering, an ETO. There's other classes of tokens, fungible, non-fungible tokens that are just growing leaps and bounds today. And the last class, which I spend like an hour on in my course, I think is fascinating, and has to do with stable coins. So one of the issues with Bitcoin and Ethereum, they're just brutally volatile. So they're 5 times more volatile than investing in the S&P 500. So stable coins, you're able to use a cryptocurrency that is pegged to something. And there's many different classes, such as fully collateralized, where every dollar that's issued in the stablecoin is backed by a deposit. So yesterday we had Circle's chief evangelist in my class, and USDC is their coin. They went from 0 in November to $320 million in capitalization today. And this allows you to do things, for example, probably we don't need to do this, but if you had to do it, it's Sunday, 2 in the morning, you need to transfer some money to some point in the world, use USDC. So you can do this very quickly, 24/7, very low fees, and you don't need to worry about the volatility. So this is, I think, a big idea. There's a number of firms that are in this space. I list national crypto fiat, and you know this is going to come, right? So it's kind of obvious that we're not going to be using paper currency in the future. You know, some countries like Sweden, only 1.5% of their transactions are in physical cash. So we know we're going to go there. So it's just a matter of time before a Fed coin or something equivalent to that will be available. It'll be running in parallel with currency until the regulators and the Fed and the Treasury kind of figure out that, well, if we have a blockchain-based cryptocurrency, you can't evade taxes. There's no paying somebody for some utility work with cash. It's all in a blockchain. So we're going to see this just a matter of time. There's also natural asset collateralized tokens. So this idea of collateralizing with dollars, well, it doesn't have to be dollars. It can be gold. So there's a vault, some gold is dropped in, and there you go. So again, you can hold a gram of gold or something less in your wallet. What does that do to the ETF complex that deals with gold? Why would you buy ETF when you could actually hold the gold with a token? Okay, and you need to be thinking about tokenizing anything. Just today in the news, and I added it, there's a new token called D1, and it is fully collateralized with diamonds. So again, you could do anything in this space. So this is a boon for especially the consultants, the blockchain space, where they can go in and say to a legacy firm, this is how we can help you adopt this technology. You're going to save money. You'll be ahead of the curve. And it's created a lot of business for the main consultants. But, as I said, we need to be careful. So given all the hype, there's going to be charlatans that will arise. And this is one that's happening in real time during my course. So this is BitConnect, and they've got a coin. And basically, you send them a cryptocurrency like Bitcoin, and they will translate it into their currency, BCC, and you are guaranteed, that I'm pulling this stuff off the website, up to 120% return per year. And it says, we're earning interest by holding their coin for helping maintain the security of the network, whatever that means. And it gets better. So you've got 60% or 10% per month for the first 6 months, and then it drops to 8%. And this is their schedule of the money that you can make. The coin rises to $437. And again, some of the language is very surprising. Now, the security of the network, they start talking about volatility software interest. So $100 to $1,000, up to 40% per month, and then $1,010 to $5,000. I'm not sure what happens if you have $1,005. It's like not covered in the schedule. But again, you need to be incredibly suspicious of this. And this is the pièce de résistance. If we could play this, please.
And let me tell you that we are really changing the world as we know it. The world is not anymore the way it used to be. No, no, no. Be connected. Wow. Be connected. Be connected.
Okay, okay, you get the idea? So interesting that, and this is in real time during my course. Again, I need to pivot. I wasn't joking to Eric that 8 months ago the material could become irrelevant. So North Carolina and Texas essentially close these people down. the coin drops 87% in one day after they got served by North Carolina and Texas, down to about $30. But these people didn't give up. So they sent a note out saying that for the next 10 days, they have a special offer where you can buy the coin for 150, even though it's trading for 30. And importantly, I put this arrow, says, for the next 10 days, we're allowing members outside of the USA, which is just a massive red flag. So we kind of can guess what happened. It goes to zero. So this is an example. It's not the only example, and I'm sure many of you saw this Wall Street Journal expose about all of the ICOs that they looked at, and the proportion was a staggering proportion where they found red flags. And things like this is one for Premium Trade. The founder and CEO, experienced entrepreneur who has founded a number of companies in Russia and Europe, Czech Republic, also worked at Allianz. Okay, pretty good credentials. The problem, of course, is this person doesn't exist. It's just like some photos off the internet. It's a model, right? And again, they're collecting money for this ICO, and it doesn't really make any sense. So this, I want to emphasize, is not unexpected. When you get something that runs up in value, as we've seen over the past few years, people are going to jump in and try to take advantage of you. So that's the reason, I think, to come to an event like this, or to take a look at all of the materials that are online. By the way, all of my teaching materials are freely available on the internet for download. And there's a link at the end of the presentation for that, and the presentation we can share with everybody. So this is what we saw up to the end of December 17, and obviously it spiked about mid-year, and the ICO activity has actually been reduced. So does this mean that ICOs are going away? Probably not. And part of this was regulatory confusion. Some of these ICOs are securities. And if they're securities, then they need to be approved by the SEC. So that's why it was kind of the Wild West, people offering securities without going through the process, and a lot of fraud ensued. So I believe that the interest in this space, don't judge it by the ICOs. So again, I'm fairly deep in this space. I see how easy it is to get in front of venture capitalists in this space. So organizations like A16Z Crypto are well endowed with funds for long-term blockchain investment. Paradigm, that is co-run with a Duke grad, the co-founder of Coinbase, recently raised $400 million exclusively for crypto type of investments. So the interest is still there, and the interest might not be in terms of an ICO. It might be the usual way, the traditional way to get funding through seed funding, Series A funding for venture capitalists. So the interest has not diminished. Indeed, for me, it's a little easier because some of the people that were in this market have gone away. So the people, the speculators that thought that Bitcoin was going to go to $1 million in a few years, they've gone away. And these people do exactly the opposite of what we teach in finance. They buy high and had to sell low. Okay, so that kind of noise has gone away, and the firms that are in the space now, I think, are not impacted by that noise in the same way that they were in 2018. So that's Paradigm and A16 Crypto. So what I like to do to end off is go through a checklist that I developed. So given, as I said, I've seen so many of these ICOs and ventures, so not all the blockchain ventures are doing an ICO. So many of them are just trying to raise capital. So this is a checklist that I usually go through, and indeed my students also have to go through this checklist if they hope to pass my course. Okay, so a lot of this will seem familiar to you because it's kind of common sense ideas that we use in venture capital. So let me go through that, and then I'm more than willing to take some questions. So basic idea, like what is the problem that is being solved? Are you inventing a problem? Or is this like an existing problem? So there's lots of problems that you can solve, but they're small problems. This has got to be economically important. So it's got to be a big problem that you're solving with this technology. This is a common thing in venture capital. Does the market exist? Or does it depend on other stuff that needs to happen, and maybe the market will exist in a couple of years? So how is this related to the middle people? So is there a thick layer of middle people? So often in peer-to-peer technology, that's what you look for. The first thing you look for is whether there's a thick layer. But the second thing you need to look for is how powerful that middle layer is. Because if it's really powerful, for example, in digital music, that middle layer is super powerful. And to disrupt that space is very difficult. So both of those need to be balanced. And is the product something that could be profitable? So again, you've got all these good ideas. Is there a route to actual profitability? And the last thing is how social is the idea? So if this is an idea that everybody has to use for it to be viable, then that's a pretty negative attribute for me, because that's super difficult. You need a massive spend on marketing at the beginning. Okay, so that's the first category of idea. Second is the technology. And here, I think you might need to bring in some people that actually are technically trained to actually evaluate. So is there a white paper? And did they write the white paper? There's a market for people to write white papers. Joey, I think you were asked to write a white paper. I'm sure it'd be a good white paper. But nevertheless, you would hope that the people within the firm could produce their own white paper rather than contracting out to somebody unconnected to the idea. So there might be a solution using blockchain, but is it the only way to do it? Okay, so is there another way to solve the problem that might be more efficient than using a blockchain technology? And again, we need to think also of the future of the blockchain technology. One severe constraint today in terms of, let's say, Ethereum, is the number of transactions that you can do per second, which is, let's say, 18. And Visa does 18,000. So that is a problem that everybody knows that needs to be solved. In the future, 18,000 is not sufficient for the future of this technology. The future of this technology will demand billions of transactions per second. Okay, so again, if you depend upon a very large number of transactions per second, then we don't have the technology right now for this to be viable. So it needs to be taken into account. Number 3 are the specifics of the blockchain. And again, you would benefit from having somebody that has some blockchain background to ask these questions. So is it a coin or a token? It's a pretty basic question to start out with. And is that choice appropriate? So some people will come and say, well, we're going to use our own coin. So we need to create a blockchain, all the security, all the network constraints. Well, why? Why not use somebody else's token? You don't need to worry about it. So right off the bat, they've got the wrong model. So it's a very important choice. So is the blockchain technology that underlines the idea public or private? So we talk about Bitcoin, Ethereum, they're completely open. Anybody can join the network. Anybody can download the blockchain, which has got all the data on it. So anybody can do this. Okay, and there's a cost of doing that. So Bitcoin uses a consensus mechanism that is very costly. You use an amazing amount of computing power and energy. Just the energy alone would put them at the 61st largest country in the world in terms of energy consumption. Okay, so that is a choice within that technology. But there's other ways to do this with permission blockchains where you don't need to be public. You don't need an expensive consensus mechanism. So again, that choice is very important, and very quickly you can determine whether the company has really thought this through. So if there's a coin, we need to know what the monetary policy is. That's very important. Without a policy, the coin really isn't viable. And if it is a private or a permissioned blockchain, you need to ask questions about security. Because the last thing you want is for your secure nodes to be hacked and compromising the integrity of what you're doing with the blockchain. So the team, kind of number 4. What is their experience? So do they have any experience launching a business? So these are kind of standard questions in venture capital. But number 2 bullet, do they understand blockchain technology? You'd be surprised that many of them don't. Okay, so again, a lot of this is contracted out, jump on the bandwagon of blockchain hype. So does the management have the technical expertise to implement the blockchain, or are they going to rely upon some consultant to actually do it? It's not a disaster to use a consultant, but you still need the capability to understand what the consultant is actually doing. Is the team in place? So if you go online and look at some of these startups, they've got giant teams. Where I was looking the other day at a team I couldn't believe. They're just starting and they've got like 32 people. And all these pictures, and they're real pictures, not fake people. But the team is really 2 people, and they've got 30 advisors. And whatever that means, advisor. So you need to be careful who is actually involved in this and who is on the peripheral. Is the development team on board? So you can have the idea, which is a good idea. You can understand blockchain technology, but you need developers. So is anybody on board that can actually begin this process of building the model? And key person risk, we know, and also the last thing is very important for me. Take a look at the pitch deck. If there's any hype, then it's a big red flag for me. So it should be, here are the risks, here's our idea, we believe in it, but we know it might not work or something like that. The more balanced it is, the more comfort I have in looking at the deck. Number 5 is execution questions. Is there an ICO? Is there like a pre-sale of tokens? And there's regulatory issues like, do you need a money transfer license? That's a big deal. That's really hard to do. And especially if you have to get 50 of them to operate in the US. So that means a lot of money and a lot of time. And number 6, of course, is important for any venture outfit, and that is the upside. So is the idea scalable? So is the idea such that you could transport the idea from one application to another application? Because the expected returns on many of these ventures are negative. Okay, so the way it works is no different than in venture capital. If you're lucky, 1 out of 10 is going to work. So if that's the case, you want to see some potentially explosive upside to the actual venture. So you put all this together, and you've got a list that I think is very useful and helpful to sort out the ventures that have a chance and the ones that you should definitely avoid. So again, in my course, I've got many ideas. These are the ideas from my students last year. And I don't have time to go through them. I'd love to go through them. But let me just mention one of them, Manuka honey. Do you know Manuka honey? Go check it out if you don't know it. You get this little bottle for $50. Specific area of New Zealand. It's really rare, and it's scientifically validated for medicinal properties. So it's not just spin. So this is very rare, very expensive. 85% of the Manuka honey that's sold in the world is fake. So their idea is focus on a premium product, create a blockchain-based supply chain where we can trace the origin all the way back to the original grower. Okay, so these ideas that my students come up with are exciting, innovative. I love being the venture capital. I love to see the look in their eyes when they come up with that idea. And not all of them work, but I just want to emphasize this space is full of opportunity. And I guess my talk today, you should interpret it as a balance. So there's a huge amount of opportunity. There's also the downside. That downside is ideas that just won't work, but it's also people that are in the space playing the hype that are just trying to take you for a ride, where even a basic question, why do you need an ICO? And often the answer is, well, we want to raise money. That is a massive red flag. Okay, so you need to have a reason to do an ICO. So there's other ways to raise money. Okay, so that's where I end, and I've got like 7 or 8 minutes for questions. Any questions? Yes.
Hey, my name is Tao. I'm from SAS. I have 2 questions here. So people keep telling me that STO is going to replace ICO. So how do you think about this statement? Because right now, in a few hours, the second international security token future conference will be happening in Singapore, right? So people think STO is the next big thing. How do you think about STO? So my second question is
let me do them one at a time, because I'll forget the first one. No, I'm joking. So no. Okay, next one.
why?
No, I'm sorry. They're different, right? So security is like equity, and so you can have an equity offering with a token or a bond. You can tokenize the bond. So those are in a class that is different than a coin. So the coin is a different sort of aspect of a business that is new, right? So this is not, we weren't dealing with this in the past, where a firm had multiple ways to raise money. So they could issue a bond with a token, they can issue equity with the token, they can issue coins with the token, and people will choose what they want. And it's definitely the case that there's fewer ICOs going on today than in the past, and it's also the case that the regulators have kind of figured out what coins and tokens and blockchain actually is. So we'll see much more movement, I think, towards the STOs, but the ICO is not going away. And second question?
Okay. My second question is that, so when I read the literature, so people think there's actually 3 types of blockchains: public, permissioned, and private. But in your slide, you think...
Yeah. So this is really important. There are millions of types of blockchains. So blockchain is not one technology, it is a myriad of technologies, and many different choices are made. And even the public blockchains could have some degree of centralization in terms of the people that are determining improvements. So it is a spectrum. So I wouldn't get hung up too much on it, other than the technology that a firm decides to use needs to match the application, the problem that they're trying to solve. And if there's a mismatch, it will fail.
My question is, for me, so the private blockchain is different from the permission.
Yes,
permission
absolutely.
can be used by different companies, right?
That's
Consortiums.
correct. Yeah.
So, but the private is some people think that's in one company, just one player.
Yeah.
So there's a private blockchain. Do you see any need for private blockchain at all?
Yeah, so why not? So if it's an option to actually do, and if it fits, obviously you need trust to do that. But one thing that doesn't make any sense to me, somebody will be in a business, let's say banking, where we already trust our banks. To go to a completely trustless system doesn't make any sense. So why not adopt this technology in a way where there's still some trust? It's a lot more efficient in terms of the economic implementation. So again, it depends upon the application as to what you use. Many people think that a private blockchain is not a blockchain. So it's just we call it distributed ledger technology. I really don't care what you call it. If it can solve a problem, if it can make things more efficient, consumers save money, businesses make more money, if we can take some of the middle out, I think it's good for the economy.
Hello, my name is John Wu from the Richmond Fed. So in the past, we have there has been cases of exit fraud, exit scams with these ICOs, and even though like these coins may have passed a lot of those checklists, but I guess when the price falls, the owners has a incentive to scam. It becomes like higher than the utility of the coin itself.
Yeah.
But to be able to see these kind of things, you really requires a lot of technical expertise to look at the foundations of these coins and how they're constructed. So for a regular person looking to invest or anything like that, how is that possible for? Or I mean, obviously you can learn it, but like what would be a good way to look?
For a regular person, we'll call that a retail investor. The retail investor has got no business buying some ICO, and the retail investor has no business buying like a single stock either. Okay, so they don't have the time nor the expertise to do stock picking or even worse, ICO picking. So you want to invest in a diversified portfolio fund. You want to invest in a fund that's got experts that actually can do the vetting of these ICOs. That makes a lot of sense. If you go on your own and you lose all your money, then it's natural selection, I guess. As for going through my checklist, and let's say something checks off every single one, no red flags, there's still obviously a large probability it's going to fail. That's just what venture is about. So what my idea is to reduce the probability that you invest in something that is flimsy. That's all I'm doing. There's no guarantees in this space, especially given the uncertainty that this is a new technology, given the dispersion of skill, where some people really understand this and some people don't. So there's just no guarantees here. But of course it's risky. But the main lesson that we teach in finance is where there's risk, there's expected return. Right? You're not willing to take risk, then expected return's got to be lower. Yeah. The microphone's right there.
My name's Frank Bellato. I've been looking at blockchains for about a year. I'm an attorney. I help young companies in this whole space. Does the term investment even belong in the same sentence with ICO? Because my honest assessment of all this is that the value of the coin or the token has nothing to do with the value of the company. So the driving force in the ICO is really scarcity and the slides you put up there that Warren Buffett, right? Is that right, or am I missing something?
Yeah, so my course is not a course about investing in cryptocurrency, as my students found out last year in an unfortunate way. So, look, again, I put the list of different types of tokens and coins. So a stable coin, that's not used for investment. It's like pegged to the dollar, right? So that doesn't make any sense. There's other coins that provide like a service. So those are not for investment. So I do think that there is a correlation if you've got a really good idea between the value of the coin and the value of the equity. So you could make the case that in investing, and again, not a retail investor, but a professional investor, that you might want to invest in some of the coin as well as some of the equity. The equity might not even be available, but it completely depends upon the particular company that you're looking at. So, yeah, again, I look at this not as like an investment vehicle. When you're talking about crypto volatility of 100% annualized per year, you need to have a real stomach for that. And I tell my students and others that if you do choose to be an investor, then you need to go in with your eyes wide open, and you need to be able to accept a loss of 90%. 90. And indeed, that's what we saw, last 84%. Okay, so if you bought at the peak, of course. So this, I think the opportunities here are not in the investment space, but in terms of just gambling on a coin or a cryptocurrency, it's in the company space. What these companies can do, very disruptive. And I much prefer investing in the company, so in terms of the equity, if it's available, than just speculating on some coin. Okay, well, it went a little late. Okay.
Why don't we thank Cam? The next thing is